Okay, well, welcome everyone to our third Immigrants Rising webinar in our webinar series. Today, I'm so excited to have KARLA Reyes, Associate Director of PROSPERA Co-ops, join us. So I will introduce her shortly, and she'll talk a little bit about PROSPERA Co-ops as well. But before I begin, again, a few housekeeping items. So everyone who's joining will be muted throughout the presentation to ensure optimal audio quality. KARLA and I will go through the entire presentation and then take questions at the end. We'll be taking questions both from the Q&A section and from the chat section, so you may feel free to add your questions on there. If for some reason we're not able to get to your question, or some of your questions may be a bit more individualized, we'll make sure to email you or let you know that we need to further explore that particular issue. And if we can't get to any of your questions, you may email us. We will have our contact information in the last slide of this presentation. You should have received a handout which was sent about an hour ago when we sent the reminder, and I'll be referencing that handout throughout the presentation. If you did not receive the handout, I will be sending out a link to a shared folder that includes the recording of this webinar as well as the handout, and previous recordings and previous handouts as well. Let's see, so with that, we're going to go ahead and get started. So just to give you a brief overview again, so Immigrants Rising is a new initiative intended to promote entrepreneurship opportunities for all immigrants regardless of legal status. As I mentioned before, this is webinar number 3, choosing a business structure. We've gone through choosing a business structure. We've gone through, We've gone through introduction to working for yourself, ITINs, EINs, and taxes. And if you do not have the link to those recordings and handouts, feel free to send me an email and I can provide you with that link. So now I'm going to introduce the wonderful KARLA Reyes. So KARLA Reyes joined PROSPERA in July 2015, and she's currently the Associate Director. She brings a lot of experience in small business marketing, startup assistance, and entrepreneurial education with organizations like the Small Business Development Center. She co-founded a program that provides outreach, advocacy, and direct services to Spanish-speaking immigrant students at Evergreen Valley College. She has an MBA from the Lori Loki Graduate School of Business at Mills College, and she lives in the Silicon Valley with her 2 cats, Hunter and Chiquita. In addition to that, I've known KARLA for many years and has been very involved in the business world, has been a wonderful partner in much of the work that we've done ever since the Life College Guide that came out back in 2012. So excited to have her join us. So KARLA, welcome.
Thank you so much, Ileana. I am so inspired by the work you and the folks at E4C are doing, and so thank you so much for the opportunity to join you on this webinar. I'm also really excited to be representing PROSPERA Co-ops. We are an organization that identifies groups of women who are entrepreneurial women who are interested in developing cooperative businesses and really working with other women to develop themselves and develop their leadership to become change agents in their community. So I'll share a link to our website and share a little bit more about cooperatives in a future slide. But we're really excited to be joining E4FC on this webinar.
Thank you. Okay, so before we begin with this release of viability statement, we actually have a poll for everyone. So we're trying this out for the first time. So I'm going to go ahead and set that up. So the 2 questions that are going to be asked are, in what industry are you planning or currently doing business in? We have a few options. And then the second question is, do you currently own your business or work for yourself? Okay, here it goes. So I'm just going to give everyone a few minutes to answer the questions here. Okay, so last 10 seconds for folks to cast their vote. Okay, wow, I see that we have a bit of a split of folks who are currently own their own business or work for themselves. This is great. The majority of folks work in professional services. Okay, so I'm gonna go ahead and close this poll. And I'm gonna share the results with everybody. So now you should all be able to see, we have quite a few folks that are already currently working for themselves or own a business. Again, about 70% of attendees are in professional services. So hopefully this will help us also get an idea of the type of information and examples I will be sharing with you today. And with that, we'll end the poll. Okay, so we're gonna go ahead and get started with the presentation.
Great. So we're really excited to be sharing this information, but we want you to keep in mind that the information shared on this webinar is for informational purposes only, and it's not going to substitute legal or professional advice. So during this webinar, we're hoping that you're going to end this webinar with knowing and understanding the following. One is, what is a business structure, right? Understanding the considerations of choosing one, and also an overview of the most common business structures as they relate to immigration status. And we hope that you walk away with some resources that are available for entrepreneurs considering to formalize their business. Now, what are some key differences? We've been talking about, well, in other webinars, we've been talking about independent contracting, and we want to make sure that you know the key differences. Although these are not the only differences, we want to make sure that you get an idea of what some key differences are. So for one, independent contractors usually do not have employees. And clients hire you directly as an independent contractor. Whereas as a business owner with a formal business structure, your likelihood to hire employees or other contractors. In addition, clients see you as part of your business, and they in return hire your business and not necessarily you. And one example of that can be, actually, for example, if you're going to go get your taxes done by, let's say, somebody that you know that can do taxes and does it maybe out of their house only during tax season, they may not necessarily be employed or working at H&R Block or at Dun & Dun Taxes. Those folks would be independent contractors if they don't have a formal business structure. In return, however, if they have a business structure, you may hire an agency, for example, Dun & Dun Taxes, H&R Block, who will then assign somebody else, their employee, to actually be your tax preparer. So that's one example the way to think about the differences between an independent contractor and a formal business. We'll get a little bit deeper into what those differences are. And also now in choosing a business structure, there are some considerations that you need to make, and this is really important. In thinking about choosing a business structure, you want to think about what personal liability you want to have, and in thinking about financial considerations, what assets you have. So for example, if you own a home or if you own other businesses, in choosing your business structure, think about what personal liability you're willing to take and what personal liability you definitely want to make sure to protect. Right? What personal assets you want to protect. Also, if you're going to be thinking about having capital access, so it's also important to take into consideration if you're planning to apply for a loan or if you're going to be asking to raise venture capital. It's important for you to take that into consideration. Also, your tax liability. Is there a minimum annual tax for the type of structure you're going to be choosing? And will you as a business owner be taxed twice? So that's something to consider. Some risk and liability, how much risk you can afford to take, if someone gets hurt, for example, with your product or service. Some state requirements are also important. Some states require you to have formalized business in order to give you a certain type of license. And also personal ID requirements. Some states also have, some entities have specific work authorization, residence requirements, and personal identification requirements that you need to consider. And lastly, but not least, the vision for your business. So one thing that you want to think about is where do I see this business going? Do I want to make sure to sell it, have the opportunity to sell it to somebody else? Or do you want to pass this on to future generations? So thinking about what vision you have for your business is also something to consider as you're choosing a business structure. Now, Ileana is going to talk about the types of business structures.
So I'm going to go through a very general overview of the most common types of business structures that exist. And pretty much these, it's the same process for U.S. citizens as it is for all immigrants, regardless of legal status, with the exception of a few issues related to certain corporations, which I'll talk about in some of the slides. So in general, these are the ones we're going to be going over in this presentation: sole proprietorship, general partnership, corporations, both CNS, limited liability corporations, and we'll end with cooperative corporations, also known as worker co-ops. So I'm going to begin by talking a bit about a sole proprietorship. So very similar to independent contractor work, there is a requirement for you to have work authorization. So I've gone very much into detail about this in the first webinar, but you must still abide by federal statute code 13248A4, which I discussed previously, which basically says that it's really all about knowing. So it's the knowing part about your immigration status that really counts. For more information about this, I definitely recommend going back to webinar 1 to learn more about the legal aspects about what it means to work for yourself. But in terms of the sole proprietorship, so this is the next step ahead of choosing of working independently. So now with this option, you formalize your business as you as an individual. Where there is no legal distinction between the owner and the business. In terms of the personal information that's required, you will use your Social Security or ITIN to start a sole proprietorship. Only in some special circumstances, such as when you're interested in hiring employees, and this goes also for independent contracting, which you have to apply for an EIN, which I discussed in the second webinar. You must also file a doing business as statement, also called a DBA, with a local government agency such as your county clerk's office. In terms of the liability and the taxes, working as a sole proprietor means that you're working as an independent contractor, so you are still held liable for all debts incurred by the business. You have the same liability, should follow the same guidelines, and must use the same tax forms as an independent contractor. Again, for more detailed information about what it means to work as an independent contractor, you can watch webinar number 1. In terms of the setting up a sole proprietorship in California, again, a lot of these different options that we're going to talk about in this presentation do vary by state. So at least these are the steps to do this in California. These are very general steps. Depending on the type of business, you may be asked for additional information. But in general, you want to always start off with a business plan. And this really goes for any type of business structure. It really helps you to have a clear idea of what it is that you want to do. We do plan to do another webinar specifically talking about a business plan. But for now, there's a lot of information and resources online in terms of how to set up a business plan. If you use a business name that is different from your legal name, so as a sole proprietorship, you could use your own name, but you can also file for a fictitious business name statement at the county recorder's office where the business will be located. So here we have a general ballpark of how much that costs. It's approximately $35. And in the handout, there are links to information about how to file for doing business as. You also have to make sure, you have to double check that the name you want has not been taken by anyone else. So all those links are available in the handout. Step number 3, you go to City Hall to register the business and get a business license. Again, this really depends on the type of business you want to do. It may differ, so you may want to do some research ahead of time, either online or in person at City Hall, to figure out what type of business licenses you need for your specific business. You also need to research additional licenses or permits that are needed to conduct the type of business you want to do. All of this is available online, or you can go in person. And the handout does include some links to look for additional information in the state of California. In addition to that, you want to open a business account. You can open a business account using a social security number, your ITIN, or your EIN. Other requirements may have to be fulfilled depending on the county or the state, such as registering with the local newspaper. You would want to report and pay taxes, again, using your social security number, ITIN, or EIN.
So now,
sorry, Carla will now talk about the partnership.
Thank you. So general partnerships are very similar to sole proprietorships, but a partnership is a relationship between between 2 or more persons who join and carry on a trade or business. Usually, you do have to have 2 people in order to have a general partnership, and you are agreeing to create a business or share profits and losses with this other person. All partners share equal rights and responsibilities in managing the business, and in addition, each general partner assumes full personal liability for the debts and obligations of the partnership. You usually, similar to the sole proprietorship, you each would need to either have a social security number or tax ID number in order to register the partnership, and but you can also have a fictitious business name, so that is definitely something that is an option for general partnerships as well. And some things to consider as far as when going into a general partnership is to have a separate bank account that should be established to run the operations. You also need to know that each partner is responsible for paying taxes on their distributive share. In general, a partner is personally liable for all business debts and lawsuits. So when thinking about who you're going to be going into partnership with, you want to think about who you can work with in that way. Because you are going to be sharing in the decision making and in all the liabilities and benefits of having this business together. Now, a partnership exists as long as the partners agree it will, and as long as there is at least 2 partners, one of who is a general partner. If you're thinking about, for example, a partnership where somebody's only going to be providing the capital to run the business, I encourage you to look into a limited partnership instead of just a general partnership. But that is another type of partnership that the state of California actually recognizes. Now, even though partnerships do not pay income taxes, however, limited partnerships are subject to an annual tax of $800. When you're thinking about which business structure to choose, make sure that you do enough research as to how much money you're actually required to pay when you file a business structure. And that's something that I definitely want to encourage you to do. Can we go to the next slide? Thank you. So now corporations is another business structure. These ones are actually very different and sometimes referred to as C corporation, mostly referred as C corporation. And this is an independent legal entity owned by shareholders. Now, this means that the corporation itself, not the shareholders that own it, is held legally liable for the actions and debts of the business. This is very different than a general partnership. Now, corporations are more complex than other business structures because they tend to have costly administrative fees and complex tax and legal requirements. Because of these issues, corporations are generally suggested for established larger companies with multiple employees. For businesses in that position, corporations offer the ability to sell ownership shares in the business through stock offerings. This is something where you probably heard it being called as going public through an initial public offering or IPO. And that's also a major selling point in attracting investment capital and high quality employees. That's something you want to think about. You also, as some personal information that is going to be required of you, you must obtain an EIN. In the guide, you can find more information about what an employer identification number is to start a corporation. And also, a corporation is formed under the laws of the state in which it's registered. So we're not going to provide specific information about what the state of California requires, but you can look into the state that you're living in to see what the requirements are. You also want to follow the similar steps as sole proprietorship, where you need to establish a business name, register your legal name with your state government. And so I want to mention also C corporations, which actually limit the liability of directors, shareholders, employees, and officers. And the legal obligations of this type of business cannot become personal debt or obligations of any individual associated with the business. And actually, what I wanted to mention was the S corporations. One of the things that you have to keep in mind is for S corporations cannot have a non-resident alien as a shareholder. So you want to look into what those requirements are in your state. One of the things that I encourage you to do is actually talk to an accountant. If you're considering becoming a corporation or turning your business into a corporation, talk to an accountant to make sure that in your industry you are actually filing the right forms, and then also using the right business structure. If a corporation is something you're considering, definitely talk to an accountant first. As far as taxes go, they vary across different jurisdictions, but C corporations are required to file state income, payroll, and unemployment and disability taxes. Which one major downside of C corporations is the double taxation that occurs, which is one of the reasons I highly encourage you to talk to an accountant to see what that means for your profit margins and for your income statements.
Okay, and I'm going to give a very general overview of what a limited liability corporation is. So commonly referred to as an LLC is a business structure allowed by state statutes that provide limited liability features of a corporation and the tax efficiencies and operational flexibility of a partnership. So it's kind of a combination. Typically, owners of an LLC are called members, and these members can include individuals, corporations, other LLCs, and foreign entities. There is no cap to the number of members or owners of an LLC, and most states actually also permit single member LLC. So I know that that's been a question that I get asked frequently, whether or not you need a group of people or one person can start an LLC. So that you can definitely start an LLC as one person. And LLC are regulated by the state. So again, all of these different business structures that we're talking about have very specific requirements by each state. So now I believe Karla is going to talk a little bit about starting an LLC as a worker cooperative.
Yes. So I have a few minutes to share a very complex way of starting a worker cooperative. But I want to say first that this is starting an LLC as a worker cooperative. The LLC is not the only way to do it, but it's one way that can be done. It specifically has a benefit for communities where tax ID numbers are predominant, and then also there's other states. You look into your own state to see if that state offers a cooperative corporation as a business entity, and that we'll review in a future slide. So a worker cooperative is a business comprised of members who are both workers and owners of the business. In this case, members can control the structure and practices of the work environment. Businesses who hire a worker cooperative are hiring the cooperative and not a single member. Some of the personal information that is required, businesses that hire the LLC are not typically required to obtain any information about the worker owners of the LLC. You are not required to provide any personal information, so your name or even the ITIN to that business or client. In this case, we're using businesses and clients interchangeably. So some liability, the LLC is an unincorporated business organization whose members are not responsible for the debts of the company, and it's a limited liability. So obligation is limited to the investment in the company, and each member of the LLC has the power to make decisions regarding the business. This is really important. One of the things to note is to make sure that you're thinking about what employment law implications there are when being a worker owner of an LLC, and that's something that you should talk to your attorney about and make sure that you are on the radar about. So taxes, it really depends on the state that you're in, but that the state the LLC is established in, and how much taxes are to be paid. In California specifically, $100 a year are minimum franchise tax that is imposed to every LLC, regardless of gross receipts or net income. And this is important because every year, even if you don't make any money, you're going to have to pay those $800. So in thinking about creating an LLC, just take that into consideration if you're a startup worker cooperative. We're gonna go to the next slide there, and I also want to mention that there are groups that are in, for example, in the Bay Area that you can talk to about their experience in starting an LLC as a worker co-op. I'm not going to get into details about some of those implications, but there are some groups that you can talk to about what those implications are and their experience in doing that. Now, some steps in creating an LLC in California. So a group of workers must research the type of business plan they want and state regulations. So you want to understand the process or hire somebody who understands the process. You have to make an agreement that establishes how the business will be managed, who the members will be, how membership will be granted or revoked, or any other details. This is especially true if you want to set up an LLC as a worker co-op, or where the members are also owners. And so in establishing that, this is definitely important in making sure that you are taking into consideration employment law, and making sure that you're not treating your the LLC members as employees. You also, the third step would be to become an LLC in California. A person must file, or a group must file, articles of organization with the Secretary of State, along with a fee of $70. These articles can be filed filing a form with the Secretary of State. Now, the group should also develop a management agreement. There are some really great examples from this specifically to worker cooperatives. Some really good groups that have already established some examples of what that may look like, and always make sure to get as many resources as possible. And then also, they may, if you're not trying to file an LLC, if you want to be an LLC but not necessarily a worker cooperative, it's still useful to, if you're going to be working with other owners of the business, it's useful to have a management agreement that is comprehensive and inclusive. Within, so the last of it is within 90 days of filing the articles, the LLC must file a statement of information with the Secretary of State that includes the names and addresses of all LLC management and all members of the LLC, and the general nature of the LLC's business activities, and other information, including who the agent of service of process is going to be. The statement will be filed every 2 years and when the information changes. In this case, you also would need to, you're required to get an employer identification number as the business tax identification number.
So now we're going to go over the pros and cons of each business structure. So I know this is a lot of information to take in, and again, this is really intended just to give you sort of a menu of options that exist if you're interested in formalizing your business. It is by no means a comprehensive presentation. Any of these options, Any of these options, if you're interested in continuing to do something like this, should be explored individually. And that's why the handout includes a lot of links directly from the Small Business Administration and the IRS to get a more in-depth dive into any one of these options. But we'll begin by going back to the sole proprietorship. So some of the pros, it's very easy to set up, low startup cost, probably maybe about $50 in general, and net losses can be deducted from your personal tax. Some of the cons, as the owner, you are responsible for debts and other liabilities, and you do have to pay income taxes on your business's net profits. And so the next step would be a partnership where you are partnering with somebody else. So very similar to a sole proprietorship. It's easy to start up, very low startup cost, and the losses, again, cannot be deducted from the owner's personal taxes. Very similar, again, to the sole proprietorship. On the con side, owners are responsible for debts and other liabilities, and owners have to pay income taxes on the business's net profits. So now moving on to corporations, in terms of the pros, so it's the owner's responsibility for debts and other liabilities is limited, which again is important because then this means that you as an individual do not get penalized for the possible losses of the business. In certain cases, benefits can be deducted as business expenses, and taxes can be lowered where owners and businesses share the profits. The con side is that the corporations can be more expensive to create. There is a lot of legal paperwork that has to be filed with the state, and the business is a separate tax entity that must pay taxes at the corporation's tax rate and individual's tax rate. So that's why there are a lot of benefits to opening an S corporation, but again, unfortunately at this point, immigrants who are undocumented are not eligible to get an S corporation. Moving on from that, the limited liability corporation. So the pros about that is that the owner's responsibility for debts and other liabilities is limited, even if they have control of the businesses. The profits and losses do not have to be allocated according to ownership interest, and owners get to choose whether the LLC is taxed as a partnership or a corporation. In terms of the cons, LLCs are much more expensive to establish than sole proprietorships. As you saw in a comparison, a sole proprietorship, you're going to spend anywhere from about $50 to $100. With an LLC, you have to pay at least $800 every year. There is a lot of legal paperwork that needs to be filed with the states. And LLCs are taxed at the entity level, and a franchise tax may be imposed depending on the state, and pay a revenue fee based on total income for the year. In addition to that, moving on to the cooperative corporation. So the pro side of that, members are usually not personally liable for, again, the business losses. Some states require you to have the word cooperative in the business name. Entity level taxation is valid for retained earnings. However, the double taxation can be avoided to some extent as allocations to members' accounts are not taxed. In terms of the cons, it can be a slower decision-making process, and in some cases, employment law does apply. And with that, Karla is going to talk a little bit about some of the resources for entrepreneurs who are ready to launch their formalized business.
So there's a lot of really great resources. I highly encourage you to learn more about business structure, see what other similar businesses how other similar businesses have structured their companies. And so the Small Business Administration has awesome resources. You can go on that link and check out their website. And I also encourage you to look into Google search contact information for your local Small Business Development Center and request a free consultation with a business advisor. And these centers, most of the time, you won't have to pay for the services, and they'll match you up with someone who's going to be able to help you determine, pretty much get you the resources to determine what your what the best business structure entity is going to be for you and your business, along with other resources. Obviously, go use the E4FC resource guide, a ton of information specifically for immigrants and for folks who are undocumented. So it's a really great resource. For PROSPERA, if you're wanting to learn more about worker co-ops and just a cooperative model. We are a resource for you. My contact information is there. And also some other free legal resources for your business. You can click on that link, and depending on what kind of industry you're in, there are some legal resources that are available specifically for your industry under that link. So I highly encourage you to get as much information, but remember that it's a personal decision to formalize your business, but there's a lot of benefit to doing it. It can get really complicated, but as long as you get all the information that you need and you can make an informed decision, like anything in business, there is a risk to running a business, starting a business, but there are a lot of really great resources out there available for you online and offline as well.
And again, a lot of the information, a lot of these links that you see on here are in the handout that was sent out about an hour ago. So a lot of the links are on there and many more resources are on there. And with that, now we're gonna take some questions. Our contact information is on here. Like I said before, if you have some other questions, comments, if you'd like to get more detailed information about co-ops, you can definitely contact Karla. And so from there, let's start looking. Let's see. So I'm going to turn my video back on, and I'm going to start looking through the chats and the Q&A. So definitely, we will start answering some questions. Okay, Karla. Okay, so here's one question. How is an LLC different from a co-op? I don't think we can hear you, Karla.
I was muted. Sorry. Okay, so both of them are actually business entities. You can be an LLC and you can be a cooperative corporation in California. If you're in California, then those are two separate business entities. Now, you can be an LLC and be run as a cooperative business with the cooperative business principles. And so that would be the main difference between an LLC and a worker co-op and a cooperative corporation.
Okay, any other questions? I know we went through a lot of material in a short period of time, so anything else that comes to mind? Okay, let's see. So we have another question. Can you talk about how people are liable if they are sued? No, we have not talked about this, so yes, we can definitely talk about how people are held liable for that. Karla, do you want to take a stab at that?
Yes. So how people, well, okay, so I'll talk about it in examples that I give to my clients, right? Like, let's say I make the best tamales in the world, and I just love tamales, and I'm sure a lot of people know what tamales are. So I make the best tamales in the world and from my house, right? And I just have my kitchen, and, I have my 2 cats, and, something happens where my tamales end up being contaminated with something, and I end up selling them, catering them out. And because I'm a sole proprietor and I've never established my business, I never got insurance, my risk, I'm taking a huge risk for somebody suing me and pretty much taking me for everything that I have, right? If somebody gets really sick. Now, formalizing my business, making it into, for example, a limited liability corporation, usually if I'm, and this is not business advice or tax advice or any kind of legal advice, but usually if you have a business where you're offering a product or a service or edible or something that you might be, where people will be consuming and that has high risk, you want to actually have a business that is formalized, that has a business structure, at least a limited liability corporation in case anybody gets hurt. And then your own personal assets are not going to be as in high risk as if you were just running an informal business from your home, or even just providing providing a service that is very high risk, right? In that case. So let's say somebody does get sick, but I'm a limited liability corporation. Even if they were to get sick, my business is responsible, but I'm only limitedly responsible for it. So I would say making sure that you have the structure that is appropriate for your type of business. and because you just never know. You want to plan for the worst. I'm not sure if I answered the question, but I would definitely highly encourage you, especially if you're running a business where you have employees, where you have other subcontractors, where people are coming into your office to get some sort of product that may hurt them. You definitely want to make sure to protect yourself, protect your assets. And I'm talking about even if you don't own a home, you still may own a savings account, or a have cash in the bank, or a car that you own. So those things are assets that belong to you and may not necessarily belong to the business. So you want to make sure to protect what you worked hard to get, and also protect your clients so that you have enough insurance and enough legal protection to be able to support your client or your employee in case anything happens.
And just to add a little bit to that, so as we move on in the different types of business structures, it's sort of like building like a layer of protection. So with an LLC, this can definitely, everything, all your clients, all the business will be done in the name of the LLC instead of yourself. So very important for many immigrants, regardless of legal status, don't have to submit any of your information. Everything is in the name of the LLC. So that's why, and again, when we talk about liability, when we talk about taxes, everything goes in the name of the LLC instead of an individual. And now there's another question that came in. Can I work as an independent contractor with a company such as Amazon by getting paid through a different agency? If so, can I get paid hourly still, or how would that work? So this question is a little bit more about webinar number 1 that talked a lot about what it means to work as an independent contractor and the differences between an independent contractor and an employee. But to answer your question, yes, you can definitely work as an independent contractor with any company, with any client. Again, the difference between an employee and an independent contractor has to be clearly stated. As an independent contractor, you would file a W-9 instead of an I-9. No need to provide work authorization. And again, a lot of these, when we think about entrepreneurship opportunities, it's a completely different mindset from becoming an employee and looking to work for yourself and start a business. When you're working for yourself or starting a business, now it's all about you're engaged with your clients. You're very much in control of the type of work that you're doing. You're the one controlling the hourly wage. You're the one controlling how much time you're going to put into the business or working for yourself. So in the case of working as an independent contractor for Amazon, you can work for them and you can work for many other companies, organizations. You can have different clients at the same time. So very different, but again, you have to have a contract that specifically says that the work you're doing is indeed independent contractor work. And again, there's a lot more detailed information about independent contractor work versus employee work in webinar number 1. Let's see, any other questions related to choosing a business structure? Definitely take advantage of the fact that KARLA is here with us, who is very much, very well aware of, all the different aspects about formalizing your business. Questions? So go ahead.
I want to make sure to touch on liability insurance. I get this question a lot from solopreneurs. Like, where do I get insurance? How do I, what is the benefit of even getting insurance? All businesses should have at least general liability insurance. And you can go to your local agent, sometimes even your auto insurance provider actually offers general liability insurance for your business, and it would be wise to get different quotes. And it's usually pretty inexpensive, and it's worth it. I can give you an example. When I was just doing consulting, running a consulting business, I got general liability insurance, and I didn't have an office. I didn't have a lot except a laptop and a cell phone that I ran my business from. And my laptop got stolen, right? And so the general liability insurance cover that. And so if you're a business that relies heavily on your computer or on different types of equipment, you would at least want to have general liability to cover any kind of incident that happens to your equipment. So I highly encourage you to look into that as well. I think we have another question. What about a business through social media? Any advice on business structures or other advice? Good question. Depending on what you are doing on social media, like if you're selling things, if you're doing marketing, I have seen a lot of online businesses be limited liability companies, and so it just really depends. But definitely you have options. So, but I've mostly seen them be limited liability companies. And it just really depends on what you do online. Even if you're offering advice, you know, if you're offering social media services, it just really depends on what you do. If you can give a little bit more information on what you're offering via social media, then maybe I could help a little bit better. I think we have another one.
Yeah, so we have a question about what is a general amount of money that someone should save per paycheck if they are a contractor to save for end of the year taxes? So that's a great question. So generally the rule of thumb is about 25% of the amount you get as an independent contractor should be saved. However, remember that as an independent contractor or business owner, you're allowed to expense, you're allowed to have deductions for the different types of businesses you have. I talked a lot more in detail about taxes in webinar number 2. So definitely refer to webinar number 2 for more information about taxes in relation to being an independent contractor. Let's see, and someone has a question. If I became an independent contractor when I had DACA, got hired, and suddenly had it taken away, would it be okay since I was already when I had to, okay, so if I understand this correctly, you were hired as an employee with a DACA, which I assume you have work authorization with that. If it were to be taken away, you would not be able to contract with that organization or company that originally hired you as a DACA recipient with a work authorization. So very important question, and definitely very important to know that because of this federal statute that exists that talks about the knowingly part. So an entity cannot knowingly contract with you as an independent contractor if they know that you no longer have work authorization. So that is very much part of the law. And so you could not be you cannot contract with that organization. However, you can contract and work as an independent contractor with any other entity other than the one that knows that you lost your work authorization. So a lot of this is really related to having a paper trail. So anybody that gets hired with their work authorization through DACA, they they have to submit all their information to HR. So there is a paper trail about you, and if that were to get lost, and if you were to lose your work authorization, then that would be known by the organization. So there is a lot more detailed information about this in webinar number 1 with a lot of resources and a lot of legal citations about that particular question. Okay, let's see, we have a few. So I think there was more detail about the social media business, so selling items through Instagram.
Yeah, I would look into the limited liability company option, definitely, if you're selling items through Instagram, especially if you're selling to different people. You just want to protect yourself, what you have in your business. And so sole proprietor, I mean, I'm assuming I would think, like, if it's something that people could get hurt by, you just never know. I would say plan for the worst and hope for the best in that case, and look into the LLC as an option for you.
And let's see, someone has a question about the limit of time if you are an independent contractor. So again, very important to know that as an independent contractor, business owner, you set your time, you set your hours, you are very much in control of what it is that you are doing. So there is no time limit to how much you can work as an independent contractor, because you may be working with different clients. Same thing with as a business owner, you may be working with different clients, so you may be working all the time. So I do give my own example. I do work as an employee and as an independent contractor. I have several clients that I consult with. So I have a full-time job, 8 to 5, and in addition to that, I do my contract work after hours on the weekends. So I do end up working very long hours and with very little vacation time, but that's because that's how much I want my contractor work to grow. Same thing with a business owner. As a business owner, you need to determine how much time you need to be investing in your business to ensure that there is growth, to ensure that you have income coming in. So very different from an employee where you have a set schedule, where you know there are a lot of rules against overworking, not taking your breaks. Completely different, because now you're on your own as an independent contractor and as a business owner. Let's see, will you repeat any of the past webinars? Unfortunately, I will not be repeating the webinars, but they are all recorded. And so every time I send out a link to the recording, it's a link to the general shared folder that includes all previous recordings and handouts. So you're more than welcome to watch the other webinars on your time.
Can I add one thing while we wait for another question? Can I add one thing to the question about how much you should be putting aside for your, if you're a contractor? I think one of the things that I've noticed for folks who are going into independent contracting is that they often don't negotiate their hourly rate. And so I think if you're thinking, for example, somebody offers an organization, or a client offers you $15 an hour. Know that you can't keep all $15 an hour, but if you'd like to keep $15 per hour worked, you'll need to ask for more. And oftentimes we're not necessarily trained at negotiating these rates. And so we end up leaving money on the table. So I would highly encourage you to put a formula together on for your hourly rate for the types of services that you're going to be offering, and don't shortchange yourself. And making sure that you are going to be able to get what you need and what you want out of that contract, and make sure to negotiate. Like, you don't get what you don't ask for. And so I noticed that a lot of folks end up having to owe a lot of money to the IRS because they didn't negotiate, or because they really needed $15 an hour out, like after taxes instead of before taxes. So make sure that you negotiate. Don't leave money on the table. Instead of putting aside the 15%, ask for, or the 25%, ask for more. Like, ask for 25% more. I highly encourage you to do that as well.
Thank you. So we have about 4 minutes left until we finish our webinar. So please send over your questions. Let's see. Do you have recommendations on names, titles, language to use when creating a business, given your experience? Do you want to take a stab at that?
Do you mean business names? Names, titles, language? Okay. If you're formalizing your business, definitely test out a few names. Think about if you go with a business advisor, for example, ask somebody to be matched up with somebody who has marketing experience, because that's really what you want to be looking at. How is your customer going to relate to your product or service, or to your company? What you want them to feel. You also want to see, for example, some of the biggest brand names. I won't mention any of them because they're not funding this webinar, but like, there's some really big names that have already done the research for you. So think about what you want your client to hear, how you want your brand to be relatable to your client, what you want your name to inspire in your client. As far as titles go, I think you're talking about like your own title, like, am I the CEO? Am I the, boss lady? Am I the, who are you? And I would say, think about how you want to present yourself in the type of business, and what other kinds of other businesses are calling the person in charge, or for example, like, what do other consulting businesses call the management? So definitely don't play it down, because also if you're going to be going to ask for funding, they want to make sure that they're that you look like you know, like the CEO, and you sound like the CEO, and you have that title. So it is important in certain settings. So think more about who's going to be your audience and how you want them to perceive you as the owner of the business, or as your management team. And then look at different examples that are in your industry. And as far as language, when using or creating a business, given your experience, I think thinking about the feeling. Like, I would just say, if you get anything out of what like all the rambling I just did, just think about the feeling you want to instill in your audience. So I would say definitely think about that.
Okay, and I think with that, we're going to go ahead and wrap up this webinar. Thank you, everyone, so much for joining us. Thank you, Karla, for being here and really sharing all the wonderful expertise. If anybody has any other questions, feel free to reach out to Karla for more questions. And then the next webinar, so we are planning a few more webinars. Let me go back to that page to make sure I get the correct webinars. The next one we're doing is developing a business plan, and we're also going to do another one. We may switch the order of some of these webinars, but we're planning to do another one on accessing financial capital and building credit and supporting your entrepreneurial family. Again, I'm going to be sending out an evaluation, so please take a moment to fill out the evaluation, send your questions. And again, thank you so much for joining us. We look forward to seeing you on our next webinar. Thank you so much. Bye-bye.